Starting the YouTube, I can see the link today, so everything should be good for posterity. Right, I'm going to make sure I'm speaking above the microphone and not into it, so we don't get those pops. Okay, and 9 seconds. And not into it, so we don't get those pops. Good morning, everybody, and welcome to another hour on a Friday morning. And the market's just giving us a bit of volatility as we speak. Before we do the disclaimers, or as we do them, I'll just flick over so you can see what I mean. So yeah, they're both just shot upwards. Anyway, I must do the disclaimers. So let's go and do those. All Bookmap Limited materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, let us just quickly have a look at this. I wasn't expecting as violent a little upthrust there. We had some sell icebergs, which you can see in pink in NQ. They've been smashed through. You've got some resting liquidity up at that round number of 14,950. After such a violent little move, let's see if it can get at least to this wall of liquidity up there. Yeah, so we'll just watch that for a second. And by the way, I have gone back to the side by side. I like to switch things up. You probably know that already. But one thing that I do use in my own trading, and this applies equally to stuff that I have outside of Bookmap as to stuff inside Bookmap, is I do like to see markets side by side, especially since I'm trading both of these markets. And you're aware that I look at quite a few other markets because I believe more in relationships, confluence, correlations than I do in any magical indicators, which I do not. And I have coded a few, so I know of the mathematics involved. Right, okay, so we had a little pump up, now it's coming back. Let's go to our slides so we can talk about what we have going. So it's still the new format. We're not necessarily doing it in this order. I think today we are more likely to do the context before we do anything else, and then we might go back into a couple of things that we saw in ETH because it was quite interesting, especially the way those icebergs set up before that plunge upwards. Surge upwards. Okay, there is some news. That is probably the reason for that volatility, but they probably knew that beforehand anyway. The news that I can read out is that the US and China are to start working groups on economic and financial issues. So that came out at belatedly, but the actual news was at 8 o'clock exactly, and we saw that coincided with the surge upwards. Okay, anyway, let's go on to our context. Right, we've got nothing major in the 8 a.m. to 9 a.m. on the economic calendar, so we should not need to wonder too much about another surge in volatility unless there's another unexpected piece of news. We do have one Fed member, FOMC member Cook, speaking at 10 to 9, so that's towards the end of our hour. Right, let's have a look at some of the context. Okay, instead of doing a daily heat map, I saw something posted in another of the Bookmap Discord channels, so I thought I'd put this in here as well. This is a weekly snapshot of... Sorry, I'm just looking at the comments, just making sure that I am covering comments at the same time. Okay, this is a weekly snapshot of what has happened in the S&P 500 this week. Right, and remember the context for the multi-month uptrend rally has been the leading or the narrow grouping lead of 5 big techs, Amazon, Nvidia, Google, Microsoft, Apple. Okay, and this week we had the Apple iPhone 15 release, so maybe that's the reason why that is not as down as the others, but the others have had fairly massive wipes. Nvidia, which was the leader earlier in this trend, that is down nearly 11%, as is Amazon. So that's interesting. There is a liquidation of the market. Okay, back to this chart. I've left the multi-month uptrends on there just so we can see. So we have broken through this double bottom zone. I was wondering if we get any kind of spring. Maybe we'll get that today. But yeah, that was a key zone, and we've got the longer term uptrend still in place. But this particular multi-month uptrend, the sharper one, steeper one, has been broken quite clearly. And yeah, NQ is still going up. We can flick backwards again if anybody would like. So you can see that surge upwards towards that liquidity there. So if you had managed to get in and ride a trail on that iceberg, you would be sitting quite pretty. In fact, you could have got back in on the retest, but we can go through that in a little while. Okay, let's get back to the slideshow. Okay, next. NQ, daily again, same kind of interesting zone, but more importantly, it's very close now to the second uptrend line. This is the shallower multi-month uptrend line, so it is in danger of completely breaking the uptrend. I discount anything I particularly read on Twitter about how low it can go, or any videos that people suddenly post who know everything. I know nothing. I do not know the future. I can only trade on probabilities based on what I see. And we are more interested in alpha, as in edge, over the longer term than forecasting the future here. Okay, I thought I'd just throw in the 15-minute. The reason I have this here is because after a big day's range, it's interesting to see where we are in relation to yesterday's. So you've got yesterday's low there, which we tagged and bounced off. This is for ES. And the halfway point being yesterday's mid. Are we anywhere near that? Because after a big range, they quite often come back and tag that. It's not a probability. I'm not going to quote any market statistics on that one, but I'm just saying that after a very extended range day, as in range as in trend down day or trend up day, they often have this habit of getting back to the yesterday's mid. And finally NQ, so a little bit of a stronger bounce. We're sort of halfway between yesterday's mid and yesterday's low. Okay, all right, let's go back. Okay, yeah, although I have got ES and NQ over here, I am not ignoring what we normally look at over here on the right, being the 3 minutes. I do have them elsewhere on my screens. I can show you can drag them down. What I thought I would do is quickly drag this down just to give you an idea of patience, I suppose. We can see in Bookmap that the sell icebergs in NQ were placed on the, let me draw this without my pen, I'll take that in a second. The sell icebergs were placed around about there on this stroke down, right? There was tremendous opportunity to get in for a long to retag those sell icebergs. You had a big spring, which would be quite a hard one to take, of that NQ low, but this little retest here, this one, just let me just draw that. On a 3-minute chart, that is the beauty. In fact, the one previously. So you had two good opportunities to get in and showing patience to tag that, and depending on the way you trade, you might have been done for today. It's just interesting the way that they set that up for people. So sometimes they do provide really good opportunities in this session up to the US Open. Let me just get that one out of the way and let us have a look in NQ. And they've put another sell iceberg here at the top. So again, I'd say the probability is, looking at the number of 15, sorry for moving my cursor around so much. They've got 15 there. They've got appetite for more. You've got liquidity up above that they're screaming out. The idea is patience, wait for structural setups. And here, you might well get a break of this low point here, and that might get us a trigger to go long again. But let's just go back in time to have a quick look at this sell iceberg. I'm being careful of dragging, because if I zoom out too much, then we may end up a long way from where we want to be. Okay, So you had this great big drive up, and well, it's not great big, but a good drive up, and then they placed two sell icebergs here, and that bounds the market. By that I mean that there's a swing high which almost tags it, and then they go lower. All right. What I'm saying for those is that where you have a significant size on that iceberg in NQ, I tend to ignore the tiddly ones in NQ, but I pay attention to the small ones in ES that are above the market, i.e. the sell icebergs, but not necessarily the buy icebergs. That constitutes one piece of market generated information for you that is a target or an initial target. Remember, the idea that I'm suggesting is that you scale. So that would be an initial target, and that might not even be your first scale depending on how good your entry was into this trade. So that you have this target. Time to dig out the pen. Dig it out. So which color should we go for? Let's go for blue. Right, let's see if the tablet is working, behaving today. Nope, cannot see it. Nope, let's ignore the tablet then. It's not being my friend today. So bit of a wobbly square. So you have some swing lows here. Now we can start zooming out and looking at opportunities to get in. So the idea here is you're looking to take out that swing high, get any stops of anybody that is here, thrust up into that sell iceberg, and then see what happens. So in other words, you made more than your 1R by the time you have broken through or at least tagged those two icebergs. And the idea again is to show plenty of patience, because NQ in ETH will have multiple opportunities. And the idea as well, if you are scaling and you are getting in, I have to get rid of those because they're now in the way. If you're scaling in, it does not matter if it does not get to the targets the first time. So I'm saying here, if we draw a line across, we mark this swing low, and we have a look at this trade here, which was a 48. That's a lovely trigger type trade. What do I mean by this being a trigger? I mean it's a structural spring, so it's a breakout failure below the last swing or below a significant swing low on this time frame. Doesn't matter if it's not a significant swing on the 15-minute or the hourly. On this chart, it's a significant swing. Takes it out, fails, and you've got a lot of volume, being 50-ish on NQ, which at this time of the day, what, quarter to 8 in the morning, was significant. And you've got the main target, which I described up there, and you have a tight stop. So whatever you get in, whether it's 5 to 10 points, whatever you manage to get in, there's a good chance you've got at least 1R by around about here, and that could have been 2R. So the fact that this doesn't actually get you straight there does not matter. What I talk about a lot is repetitions or opportunities. Actually, it does. So I take that back. I thought it did actually come back down one more time. So I'm suggesting that you might have your 1R around about here. 2R could have been this little stop run up there, or 1.5R. Depends where you put your scales. I think on my current, my scales are partly dependent on statistics on how I've been performing and how rotations have been at that time of the day. But my current scales are in the order of 1, 1.5, 2, 3, and 4R. And certainly with the 3R and the 4R, if the trade is working, I have absolutely no hesitation in just moving those far, far away and doing a manual trail behind price. Again, I cannot predict the future, and if the trade suddenly starts working out, who am I to complain if it goes in my favor? All right, just checking to make sure we have no comments, and also to make sure we've got an audience. Anybody on YouTube, if you've got any issues with reading any charts or any of my microphone issues, please pop a comment into the chat box in YouTube and I will see it. Okay, so I'm just saying that you had a spring, the trigger was sizable volume at a spring location, and it smashed straight through that. Somebody knew about that economic release or the economic news at 8 a.m. It was just too convenient. But ours is not to wonder if they did actually know. Ours is to trade what they gave us, and they gave us a good opportunity to go long, and it's still driving long now. As you can see, it's taken out that resting liquidity at 14,950, and it's still pushing up. So if we're talking about microstructure here, and you've got a swing high, you've got, let me draw again. Bit annoyed that the tablet is not working at the moment, but you've got like a micro bounce area. They break out again from that, and now they're exploring higher. So if we zoom right in, and we will talk about the ES as well in a minute. I've had some requests as well to talk about NQ, because I keep mentioning that you do get more opportunities, and by more opportunities I'm talking about good opportunities to get several scales on a trade. And remember, even if your win rate is only around 50%, even slightly less or slightly more, if you get a few of these winners that achieve much higher scales, and we're talking about 2, 3, 4, 5, 5R, that is wonderful. You just go and do the maths, go and write it out, go and do it in Excel, and see what happens if you have a 50% win rate and your average win is 1.5R, 1.6R, and your average loss is 1R, and take commission into account there. And you can see the maths for yourself. And again, this is a mathematical game. The emotions are just to throw you off the maths and the fact that it's about probability. It's not about winning. It's not about losing. It is about the statistical probability of you winning and having a positive expectancy of your wins versus your losses, i.e. overall over a series of trades. Okay, so you've broken out of this little bounce area, and now let me just get rid of that. So what I'm saying is that you've got some ice, you've got them pushing, but if we really zoom in on the micro basis, I've only got half the screen here because I've got ES as well, you can see that it is exploring up. Every time we, on this tiny time frame, I can zoom up again, you tag, they cannot get any lower. So they form a low, they can't get back down to it, they're exploring up. That is micro trend motion. It can turn into a major trend, but that was micro trend motion up until there, and then then we stopped. And now they're saying how far low they can get, but bearing in mind you've still got this liquidity above. And again, bearing in mind that we cannot predict what is going to happen. Okay, I'm just saying, no, sorry, I thought there was a comment, but it's a comment on another Bookmap channel, so that is neither here nor there. Okay, I'm trying to find my own channel again just so I do not miss any other comments. Come on, channel. Find you later. Yep, there we go. Okay. Right, okay. I was also going to start talking about ideas and some of the things that you see in a slightly different type of market, and this week has been a slightly different type market. So I won't pull up that slide again of the heat map of the S&P 500 over this week, but if you remember that one that we just looked at a few minutes ago, we've had a fairly major down move. And again, if you look at the daily, you can see that too there. So what kind of action can you expect in ETH, or what kind of action is there typically, or may there be typically in such a scenario? Because if we, I might just drag a chart over again. Okay, what should we do it with? We'll do it with NQ here. This is a 15-minute chart. And if I mean, you can see the large spike bars, that's always around the 9:30 open, so that's the RTH, so I don't even need to draw them on. It's clearly at the beginning of that. But you can see on that day, which assuming is yesterday, the font is tiny on this particular monitor, but you can see that down move there in the European session. That was a big move down, right? That was a large part of the overall move down. So you can, if you measured it, and we took a straight line here, and we went all the way down and said, what do we achieve in the European session? We achieved about 1/2 of that overall move. That is a lot of points, regardless of whether you are looking at the NQ or the ES. You had the opportunity on such a big trend down day, um, to get. I mean, if you're into points, again, I'm not into points. I'm into R multiples. But if you were into points, you had an opportunity to get as many points in the NQ session in one trade or in a couple of trades as you would do in the RTH session. Okay, so you've got a big move down in Europe. What telltale signs were there? And gosh, I haven't got my arrow. Okay. So I'm just moving that out of the way again. Okay, and I've just got to get rid of all the markers on my screen. Okay, that's better. Okay, what telltale markers? And let me see if we can just get a whiteboard going up here. And some text maybe. Yep, let's do some text. Okay, you got, okay, so major economic most certainly not priced into the current indices market price or the stock price, whatever you want to call it, right? And that happened on the Wednesday afternoon with the FOMC statement, not the interest rate rise itself, but what they actually said at the same time or just afterwards. So what can often happen with these reversals or these longer term type reversals is that as you've seen over the last couple of years, it can keep going up and up and up and up, and people are convinced it's going to go forever, and then suddenly it will just drop, and it will drop hard. I think the market is still going up. All right. What do we see? Okay, right. I haven't got a replay session in Bookmap that I can show you right this second on the screen. Let me just get rid of that for a second. I'll keep that there, but I'll move it. No, it's just not really in the way, so we'll just leave that there for a second so we can absorb what it is that I claim to have said. Okay, what clues do we get? Okay, one of those clues is by looking at the size of individual trades that occurred, right? And those trades, we go back to this. Oh, won't let me do that over there. Yep. All right. Okay, what do I mean by that statement there? They have multiple avenues to trade in. Okay, we're talking about the big boys here. We're talking about the people that deal in millions and millions and millions of dollars, right? They operate, yes, they do operate in futures. Yes, they do operate in ETFs. Yes, they do operate in various options plays, right? And they do operate in all sorts of different markets which are interlinked, okay? But if they have decided, for whatever reason, maybe this statement has not been priced in and the price is too high and they need to explore a lot lower, what they will do is that they need to get rid of some inventory. So they need to offload inventory. And we're talking about people who oops, daisy, sorry. Right, so we're talking about people that deal in much bigger size than retail. They are likely to use futures as one avenue. Okay, that's about it. We can go back to the market now. So I think I've put it into enough sentences there, right? In other words, they are going to trade much larger than you normally see, and some of those trades will be included in the futures market. All right, let's bin that. Okay, so we can at least see the market. We have to recenter the ES so it doesn't go off the screen. So what I'm saying is that you're going to see them at structural locations and certain times of the day. Those times of the day are likely to be, if they're not necessarily at structural points, at the beginning of sessions. So if you go back into your charts and maybe into your Bookmap replays for ETH, if there's any of you here that do actually keep them, and you look on a volume bubble basis, not on a delta basis, because you won't see it on the delta basis necessarily. If you look on a volume dot basis, and you go back to the start of yesterday's, where are we? Sorry, Wednesday. That's Thursday morning your time. So yeah, Thursday morning my time, which would be Wednesday evening after the FOMC US time. So it'll be 1800 hours Eastern time on the Wednesday, the 20th of September. And you go back and you look at the volume of trades in NQ and the volume of trades in ES. And also you look at the ES, for example, at massive absorption levels at those key times I'm talking about, at or before the Japanese Open, at or before the Chinese Open, at or before the German Open, and at or before the London Open. You have a look at the size of those trades, you may see something, right? And this is, why am I even bothering with this? I'm bothering with it because what you want to know, or what you want, is market generated information at all times. You know, that's the name of the game we're playing. We're not playing forecasting. We're not playing magic indicators. We're looking for market generated information that may be of practical value that we can act upon. So if you see some huge trades, and I'm giving you a hint here, if you go back into NQ, for example, yesterday in the first, sorry, not on the Wednesday evening in the first 2 or 3 hours, you'll see those huge trades. And they position themselves, right? And then you look at the end of that ETH session or the end of the RTH session the next day, in other words, nearly 24 hours later, and you look at the position that the market has gone from and to. And you know, we can dig out that daily chart slide again. Just a second. Let's go back in time and dig that one out. Yeah, the NQ daily. So we're talking about this bar here, that great big bar there, right? So I'm saying that in the ETH session, you'll find that there were key monster trades up here and also at some of the other opens, and almost certainly the case also for ES. When you see them, and yet you see the market plunge, you might still have that instinct in you that says, oh, I must fade this. This has gone too far. This has gone too far. This has gone too far. But what I'm saying is that you need to take those into context and put some of these pieces of the jigsaw together to see whether this is a slightly different day. Now, if you keep records of what happens to be a large individual trade in ETH on a normal type session, and then you see something completely out of the ordinary, that does give you a clue. I'm not necessarily saying you're going to make any money out of it, but it gives you a clue, and at the very least it may stop you from trying to fade and holding with a very, very wide stop, because that is the kind of day that, you know, if you had taken a long, and there were some nice structural technical longs in NQ in Asia, if you'd taken a long there, for example, or there, you know, towards the top of the daily candle, you know, you could have been in a lot of strife and your broker would have closed out your account if you hadn't got a stop in place. So yeah, that's all I'm saying. I'm also saying that another type of redistribution, I think, is probably the best way of talking about it in this situation. We can always draw that. I'll draw it on the chart, and I'll have to draw it with a mouse because my tablet is not working. So redistribution is in the market can often do that, and what you are interested in there, and you will find a few examples of this on the Wednesday overnight into Thursday morning ETH session is the size of the trades in ETH in these redistribution sessions. You should have a few to look at because the market went down so far. So there are probably a few little accumulation distribution. I don't really mind what word people use. I just call it a bouncing phase before the continuation, or a pause before the continuation. And the idea there is if you see some out of the ordinary, really unusual trades, you've got to stop for a second and think, should I really be going long today if they are putting that size on? And in the context of the news that we had at the FOMC. Okay, that was just a little quick chat about what can happen after a large economic release on some types of trend days. Remember, not all trend days are going to give you that information. Not all trend days are going to be preceded by a major economic release after a massive multi-month uptrend. That is kind of an unusual scenario. Quite often you'll just get quite large trend days in ES and NQ, and they may come out of the blue, or they may be driven by information such as economic releases that happened in Japan or China or Germany or the UK. Remember that when we were looking at on Wednesday's webinar, which unfortunately wasn't recorded on YouTube, we were talking about the pound and the UK CPI was lower than expected, and the pound shot. I think it was. I can't remember whether the pound shot up or shot down, but it was such a huge spark of news that caused quite a run in the indices. That was the DAX, the FTSE, and the US indices at that time of the day in the European session when we were looking at that live at the London Open, or just before the London Open. Okay, just going to stop, and we're just going to have a look at some of the market action live for a second. And I know I haven't really spoken about ES, so maybe this is a good opportunity to do what we often do at this time of the day, which is to zoom out and look at the liquidity and where it is and how long it's been there. I think I only rebooted this. I think I've got the whole of the Asian session as well. I think I do. Let's have a look. No, I don't. Anyway, that does not matter. We can see that the liquidity here, the band at 4265. Is that really 4265? Yes, it is. Keep thinking, wow, it's down at 4265, and the band at 4. Oh, sorry. Thank you. Sorry. Thank you, Tom. I had flicked across and I hadn't actually flicked to the display capture. Sorry. What I've done on this is I've simply zoomed out vertically so that we can see when these resting liquidities came in. And I'm just saying that the 42651, which is the nearest price and therefore the most interesting and also not at a round number, has been in place since the beginning of the Asian session. So that even if we're driving up now, what are we driving into? We are deriving into a round number. Sorry, that's the 4400, not the 4300. The fonts are small, so I apologize. But we're going into a wall of liquidity, which may certainly act as a barrier. Whether that's temporary or permanent for this session, I do not know, and I cannot forecast, but it's interesting that we're going into such a thick barrier. And it's easier to see the barrier when we do zoom out vertically. But you also have an interesting amount of liquidity which has been there for quite a long time. You can see exactly when they added this 200. They added that at 6:40 a.m. and at the same time they added 400 above. Again, these may just be markers just placed for the sake of it, and they may have no value in terms of an interaction with price. But again, I see it as market generated information. Even if it's an advert that they're just flagging something for us, we may not understand what it is they're flagging it or why it is that they are flagging it, but they are flagging it. This is more interesting to me because this is resting liquidity at 4365, which has not been touched for the entire ETH session. So, one scenario is if we do hold this area here, or we tag that area there, that we will come all the way down there, more likely in RTH than ETH, given that we've only got 57 minutes left of ETH. And one other thing that I've got, and some of you have obviously noticed, is that I've got the absorption indicator on here uh, in ES. And we can blow this up, maybe it's to see if it's easier to see. Let's just blow that one up and zoom in a bit vertically. Okay, you've got two types of pink on the ES chart here, and there's lots of them. So let's stop for a second and start talking about what they are. The dark pink is an absorption indicator. So if we go to our indicators and we go there, I don't change this, I just leave it as it is. It's just saying that in a fraction of a second, there's basically been a trade of 100 or greater. Okay, and in ETH, that's a lot more significant than RTH. And since I trade more in ETH than RTH, that's just interesting to me. Yeah, in some RTH days, I will double that or go to 250, but quite often I'll just be focused on other things and leave it alone. So you've got the dark pink being the absorption, and you've got the light pink being the icebergs. So what is of note or of interest here is that as we've gone up into this wall, and we just talk about this wall here, aggregating all those bands together, is that there is a lot of absorption taking place there, which gives the basis maybe of a push down later. What we haven't done actually is look at the profiles, so maybe I will drag those across so that we can look in context, because this is where those profiles can come in really handy. So this is RTH is in white, and ETH is shaded with grey, light grey. So there is a big gap down from after the FOMC, the end of the FOMC day, to Thursday. So you can see that gap there from 48 down to almost about 18. So a 30-point gap. That's massive. Okay, and it is not unusual if they want to explore back and tag it. And looking at some of the key levels, one of the ones here, LML, is last month's low. Since we're now well into September, last month's low being the August low is quite a long way away. So it's quite a long time ago, so it's quite a significant number potentially, and it's also a big fat round number being 4400. So that's just interesting, the fact that we're only 12 points off there. In fact, we came within 10 points off there. That might be an area, and then I look at the profile and see, is this nice fat HVN, as in an area they've done much business in, something that they may want to go back to again, and I can always zoom in and out on the profile to have a good look. But and also look at the value there to see, where is the value. So if I dig out the pen and notice that the value really, the pen did not work. Come on, pen. Notice that the value really is that part of the value which we haven't explored yet. So there's a chance that we could get it back up to there again, which has confluence or close confluence with last month's low. That's just some of the stuff that I look at from a profile perspective. Where, why do I have that there within near eyesight or near of my my book map? So that's just one of the reasons that I have it there. And whilst we're doing the ES one, maybe we should have a look at the NQ one, because we normally do that in our prep as well. So let us have a look at the NQ one. The NQ one, you've got really nice distribution there in this value range. We are in it, right? I haven't drawn it very well. It's just really around about to 14,916.50 per the marker, the black marker there. But there is a good potential, if they can get through some of this resting liquidity, like you can see just there, that they can get up and explore the entirety of that distribution and maybe even get a little bit into the gap. But again, we do not predict the future. We do not even try to predict the future. It's just there, just saying that you have a nice curved distribution. So it's possible now that we are in that distribution that we can go to the other edge of that distribution, and the other edge of that distribution is up at the 15,020 mark. That's just, and again, it's more about profiles than it is about necessarily looking at the order flow inside Bookmap. And I apologize to those of you that aren't interested in profiles. Okay, going back onto the topic of walls and barriers and resistance. So if we've got a big barrier there, and you're looking for some scalp opportunities at this time of the day, and again, I'm not encouraging any scalps, not encouraging any particular method of trading, but I am encouraging a minimum of 1R multiple type trading. That if you've got such a thick barrier there, you might look at where you're back into the supply zone and you've got a nice little move down there. It's not huge. What is that move? It's only about 2 points, and then it comes back with a decent trade, 684 on that one. We could zoom out and see it's a cluster of trades, but you've got some liquidity there. Yeah, you could take a tight stop and try and get back to the other side of that little mini range. And if you zoomed out there and you drew it, you had a range. So your range scalping is what I'd call that. So you're taking a supply zone and going to the demand within that range. I only say that if people are actually interested in that kind of trading. It's more appropriate to a dull day and a dull session than the kind of sessions that we've been having this week. Okay, where are we? 2040. Let me just stop. As I said, I was inviting comments, and I've got a comment from Trader JBR in YouTube. Oh no, JC, sorry, yeah, you point out what Tom said, which is that I was not showing the book map, and I apologize. I was on a slide at that time. It's the problem when you've got multiple streams or scenes into OBS, that you forget sometimes that the one that is streaming is not the one that you are actually looking at. The comment from Trader JBR, good morning, is that TraderView? When did you write that one? I don't actually know. I have shown TraderView. TraderView, or not TradingView, TradingView is that one, right? And I'm using TradingView, and I am endeavoring whenever I do display TradingView to make sure that I only display things that are free, as in there is no price attached to them. Is there a price attached to any of this? I'm using the TradingView data feed because I have that free because I have an interactive brokers account linked to that. That's why that is free. None of the indicators that I ever show on TradingView cost any money, and the same applies equally to any of the indicators in TradingView under the name Mobster 16. They are all freely available. Okay, they do not charge for those. Right, the profiles are in Sierra, and that is where I do most of my trading. I like programming in C++, so that's one of the things. I just find that in terms of being able to get execution processes that I have designed specifically for myself and my methodology of trading, it is better to customize them yourself and build them yourself, and just found that easier to do in Sierra with C++. Okay, I've got some live action here, so let's just stop for a second. I know I haven't quite gone through the idea section. One of the things I wanted to do, because Wednesday's session was not recorded, was doing a very, very quick recap of the research paper that I linked to in the Discord channel called the Overnight Drifts. I'll do a 5-minute recap of that just so that it can be on YouTube and so that other people can watch it later at some time. Okay, so let's just stop for a second and dwell on the market. Oh, by the way, also, I noticed that in my Wednesday feed, I'd labeled these as delta buyers and delta sellers. I've changed the labels. They are the same thing, but delta was just something in my mind. These numbers here at the bottom, both of the ES and NQ. Again, this is another free part of the main core part of Bookmap. The subchart, forgotten what the actual word is, but basically the data being displayed in this below the columns. So this is simply the sum total of all sellers, which is that one, the lower one, volume sellers, and the sum total of all buyers, which is that number there within the chart display. So if I zoom right in, you'll see that those numbers dwindle rapidly. What I find in terms of working out if it is a good area for me, or one of the things that I find is really useful to zoom in really, really quickly and see what is being absorbed on the delta column and the seller numbers, and also the total here. So if I was zooming right into a little bit which I thought they were absorbing sellers, I would look very quickly to get an idea of the number of sellers being absorbed, and work out in my head as to whether or not that could equate to fuel that might drive it upwards. Okay. Interesting. The action in NQ is looking a little bit more interesting in the way that they have put in these heavy liquidity bands, pushed price a long way away, and the first thing that happens then is a magnetic impulse of attraction back to the liquidity. So you can see a relatively big move down in terms of points. That was from 972 to 54, about 18 points, and then it popped straight back up to the first liquidity, and there was a decent sized trade there. Okay, so we've got 15 minutes. I might go to the overnight drift. Okay, and I have drawn this time, so I was having trouble moving around. I was having trouble on this drawing here getting left and right. I've now checked the instructions on the Sky Draw, so as and when I do draw some of these flowcharts for visual strategy on future occasions, I will be able to draw and scale so you can have an infinite canvas. So I'm just saying that if we start drawing and start talking about a topic and it ends up going horizontally left way over to the right, I'll be able to do that. Okay. Right, the overnight drift. So there was a research paper. It was an academic research paper. Why do I say that? I say that because I don't think, or I don't instinctively jump to the conclusion that there was a huge commercial incentive to the academics in writing that paper. Okay, it was just an observation. Maybe they were writing it for a PhD or whatever, or maybe they were just making a comment to the Fed Reserve. Okay, there were four statements. There were four main statements. The paper is reasonably long, so there are more statements, but I've cut it down to four for the purposes of this discussion for 10 minutes. Okay. By the way, I will try and keep this over here so you can keep watching ES over there in case there's something that we suddenly want to stop and talk about. Okay, the four statements. Firstly, price. By the way, this is talking about the US indices, so we're talking about basically ES, YM, NQ. Price goes up overnight. Overnight is the period 1800 hours to 9:30 Eastern Time. Price goes up significantly more during the European subsession. That's the session from, I think they used 2 a.m. onwards, than before 2 a.m., i.e. the period from 1800 to 2 a.m. There is an inventory imbalance at settlement. They're buying off the lows. If you were to buy off the lows in Europe and just use that as a strategy, an objective strategy where you do exactly the same thing day after day after day and disregard anything else, that returns significantly more money than shorting off the highs in Europe. Okay, so it's basically saying that if you got a push down, you might be able to trail a good trade from that push down if you got a long somewhere near the lows. Okay, whereas if you did the opposite at the highs, it would not return you as much money. Okay, how can these things be useful to you, right? I think the third thing, which we've spoken about quite a few times in this channel, we've spoken about that the market loves to come home during the ETH session. Often loves to come home during the RTH session. Home is settlement. Settlement is yesterday's close, or as provided by the exchange. It's the price that they determine is the final settlement, the closing price, not necessarily the price that you would just chart in any old charting program, but the price released by the CME in terms of NQ and ES. Okay, so there is inventory imbalance at settlement. So it's lopsided in some way. Right? Why will this encourage people to come home? Because they know that if it goes from one side, let me just draw this, okay? So let's say we have settlement here. Settlement is this price here, and we've got a whole bunch of, let's make them, let's assume they mean by sellers and buyers something like this, okay? I've used red and green, red for sellers or pink for sellers and green for buyers. This is just an example. Who knows what the situation really is, right? But say price during Asia. Oh no, I will have to draw it again. Excuse me for not doing that correctly. Let's go blue. Okay, so that's where we open Asia, And say in Asia we chopped around and then we had a push down into the pre-open for Germany, right? And then you've got this level right here, and you've got something called an imbalance right around there. One incentive for them to drag it straight back in there and through there is to check out that imbalance, because that imbalance could, for example, result in loads of stops. So that if you get there and you get just above it, you get loads of buy stops, and that pushes the market even further forward and higher, and they get even more return on their money from taking a long around about here off the lows and through settlement and beyond, right? That is why this notion of tagging home during the European session, the London session, the early German session becomes of interest. That's one thing that they noticed in their paper. I don't claim to notice anything ever. I have ideas. Some of them are generated by me. Some of them I just look at other people's ideas and investigate them. Right. Okay. Come on. Let's go back to the cursor. Now that we can go across. So what I was talking about on Wednesday is this true? Okay, the first thing I do whenever I read anything which could have value in my trading, which is really interesting to me, is ask this question: is this true or is this rubbish? I've got a couple of questions, by the way. I will get onto those in a second. I'll just finish this one, right? So what I'm saying is that you need to go and check out whether any of these theories are true for yourself, okay? And the first way of doing that is manual backtesting. So in nearly every charting platform that I've used, whether it's Multicharts, Ninja, InvestorRT, Sierra, whatever, you can create custom session templates. So in other words, you could, pen gone? You could create a session that was right, you could create that as a session, right? And then you could look at daily bars, just manual eyeballing daily bars, seeing what happened in the Asian session in general, and then do the same for daily bars in the European session, right? And just see, are the buys more up bars than down bars for the European session? Are they bigger up bars than they are for the Asian session? Then you drill down into subsessions. So you take that and you make a smaller subsession. So it might be 2 hours within that or 3 hours within that, right? And that way you begin to work out whether this theory has any legs, any validity to it at all. And only then do you get into looking at some of the statistical ways you can analyze that. And then you can look into ranges, you can look into rotations, and when you talk about detailed statistical analysis, you can take something as basic as Excel. You can export your data, your open, high, low, close bars from those sessions that you've just created, analyze them in Excel. Just do very, very simple Excel formulae and charts to see whether any of that stacks up, right? And then look at the rotations within that section. Why would I say you'd look at the ranges and the rotations? The ranges are just to see whether the up moves are bigger than the down moves, for example, and when they're bigger than the down moves, i.e. looking at 1 hour bars or 30-minute bars or 15-minute bars, whatever you look at. Rotations are really like if you were to try and start doing this, in addition to any of the other things that you do in your trading. Let me just go back to Let me go back to that now so that we, for the last few minutes, we have got Bookmap on the screen. You can see some basis for why you might have held a trailing stop or trailed for a larger move, right? So I'm just saying if you put in the work and you can see that that kind of theory, and this is just one of many theories, you can find out many theories out there in X or Twitterland or on the internet, Substack, wherever, then you go and investigate it and see whether you can apply it directly to your intraday trading. And that's when you start, when some of this order flow stuff that I go through in Bookmap, in NQ and ES has extra legs, because if you get this wonderful trigger based on the types of order flow analysis that we've been looking at, and it's somewhere near the lows after a choppy Asian session, somewhere near the lows relatively early in the European session, and you've analyzed that and maybe the theory's got legs, maybe you'll get a big trade out of it. Who knows? Right, let me get onto the question. So, by the way, there's another little cell iceberg. It's not big. In NQ, it's 5. And you've got a couple of icebergs in ES which have been removed. So that is interesting again. And we're just looking at the liquidities. They've added 75 down at 4380. So yeah, again, my point about these racing icebergs, they are interesting as targets, but do not expect the price to come back and tag those immediately. The price may go a heck of a long way, and then you're going to get some structural triggers, or you're likely to get some structural triggers, and you can trail the target towards them. But to use them, to take, oh wow, we've got this there, let me take a long hit. That's not how I would suggest it. I don't make recommendations to anyone. Again, I cannot predict the future, but that is not how I personally might play it. Okay, we have 6 more minutes, so we've got some questions, and I will look at those. Okay, Trader JBO, can you explain what are the numbers in the box? What do they mean? Okay, oh yeah, I think you're talking about these boxes here. Well, there could be a few boxes. I do this occasionally in some of these streams. I will talk about some of these boxes. So a black number means they increase liquidity. If we zoomed right into ES here, the settings for this, if this is the liquidity marker that you're talking about, is it shows me changes of at least 20. That's adding or taking off at least 20, and showing me up to 10 markers on the screen, and ignoring any changes within 4 price levels of current price. Okay, so that's all that's showing me. What I'm trying to see is, have they got more interest, when we're down here, to trade up towards there? Are they flagging that as an advert that they want people to trade up there? That is what that outside marker is. If you mean these boxes, I think I've already explained, that is just the volume of the sellers and the volume of the buyers within this chart space. Mason T asks, can you share your volume dot settings? Do you have a minimum to display a bubble? Yes, this week I am doing that, so I will go and show you. I was doing it partly for this educational purposes, because I wanted to put less noise on the heat map for demonstrating some of these ABC supply demand type structural setups that we talk about. So if we go into the volume dot settings, this is NQ firstly. I am filtering out anything below 10. So we still have a minimal trade size of 1, but we're not showing any dot that hasn't got at least 10. And on ES, it's 50. Okay, exactly the same basis. So even if we zoomed right in on any of these dots, it should not show a volume less than 10. You can see that one's 17. That one there is 21. And the reason why I'm doing it, and again, it's not a recommendation for your trading purposes at all. The reason why I'm doing it is to make it clearer to you when there is a large volume trade, i.e., say here you have a volume of 149, which might be 1 or 2 or 3 trades, I'm not sure until we zoom right in, that stands out, because quite often that will be the trigger for a micro swing reversal. And a micro swing reversal is a kind of trigger that you might be looking for. I mean, maybe we should do the opposite here. Let us have a quick look at what it looks like if we go back to 1. So we've got NQ here, we just got a quite zoomed in patch, and we then go back down to 1. Right, you might see what I meant. For the purpose of saying to you, this is a potential spring. You've got a really good volume hitting into resistance liquidity. It breaks out and fails and then goes back down, right? It is a little bit noisy trying to explain that that might be a really good trigger for a short called an up thrust or a breakout failure. But if we then just, 10's an arbitrary number. I chose 10 because I like the lower amount of noise that you see, right? And we took a look at the same potential setup, right? And you might have wanted to short this here. I'm saying that you did get a nice trade of 42 there. The trade that it took out was 147, but they're all relatively clear. That looks really big, and that is the idea, that it's not crowded by dozens and dozens of dots, so you cannot see that trade there is large and that trade there is sizable. So that is the only purpose of why I have them there. And again, in those settings, I am looking at volume as 3D bubbles. I am not looking at delta. I know a lot of people use Bookmap and they do look at delta, and that is entirely up to them, right? I am more interested in large transactions because large transactions are part of what I consider auction theory. Auction theory is all about trading in a certain direction or bouncing around a certain zone, so to facilitate a trade. Right? Trade is measured in volume. It is not measured in delta inside my brain. So that is just an explanation of why those dots are partly filtered. And again, part of this is a teaching session. Yes, I do trade. But I want to demonstrate how you look at the market, so I have to do this partly in an educational way so that you don't get blindsided by the millions of dots, because many of those dots might be meaningless to you in what you are looking for. So it might be better to see them filtered out so that you can focus on the larger ones at the structural locations that you might be looking for. Right, I think I've rattled on for a good hour, so I will call it a day. Again, I hope that it was of value to people. I tried to cover a fair bit, so have a lovely weekend and good trading today.